Right, about to go along NASDAQ here. Looking for higher prices. During the 950 1010 macro. This is a paper trade. Decided to preserve my equity in both my live account and I did take a trade on my eval. I did good, but just wanted to get some practice in, so decided to take a paper trade long. Entering off of a 15-second inversion fair value gap that is stacked on top of a 1 minute first presented fair value gap. So we entered long one contract, price dipped back into it, and we entered on a second as it moved towards the consequent encroachment of the inversion fair value gap. And prior to market open, we hit all-time highs. And I remember, I believe it was October, when we were in all-time highs, or we were hitting all-time highs. I was consistently trying to pick a top, and something I've learned and I'm trying to do better at is don't pick a top. It's not smart. If the higher time frames are screaming bullish and that they want to go higher, then you have to submit to the higher time frames. So something I've from past experience and now seeing it again, I kind of have a better, roadmap how to handle that. So I'm annotating here shorts are trapped. If you look on the left, we have some nice trendline liquidity. We have some nice intermediate highs, along with that all-time high. I think we take that all-time high out at some point today. That's my final terminus. But I have my first partial at that. I believe it's that 924 high, and that's roughly 55 handles for my entry. So I like that as a first partial. And then the next buy side that we have at 788.5. Once we hit that, I'm gonna get a little bit more aggressive with my stop if we move up there. So reducing my risk. Risking less than 1% of the account, much less than 1%. This is a hypothetical $100,000 paper trading account. So risking way less than 1%. And I have a not a civvy, but a bearish fair value gap that I have annotated in red there. I want price to disrespect it and use it as support, and I want that to become an inversion fair value gap. This is a market maker buy model, by the way, on a 15-second chart. Had a very good week of trading. We passed an eval. We grew equity in one of our funded accounts, and we are roughly halfway from passing a fourth funded. So hopefully I can get 4 funded. Maybe by next week, get another funded. I'll have 4 funded accounts, and then the plan is to scale them with micros. 1 to 3 micros. I like how price is trading above this bearish fair value gap, but I want to become a future inversion fair value gap. I have that annotated there. And at this point, I'm removing risk. Again, this is a paper trade, but you know, I want to do things proper, remove my risk. We're about to get our first partial here. Beautiful. Partial secured. I also think those relative equal lows below my entry will at some point possibly get targeted. They may keep that. They may keep that for next week. But maybe in the PM session, if we get a, TGIF or something like that, maybe they attack those lows. I like how price is staying above this inversion fair value gap. And so I'm obviously, I had recorded this trade prior, but I'm looking now at the chart, and it's pretty likely that we're going to take that all-time high again, that 20, what was it? So I have it at 26,817.75. We're going to take that. So if I would have, eventually you'll see I get stopped out here, but it's pretty cool to see that like I got the idea correct. I think that's really important for your development as a trader. Like, not only paper trade and, even if you're trading live money and you're trading funded accounts, continue to paper trade, continue to practice. If it's the end of the week and you have built equity in your accounts, maybe don't trade that Friday and just paper trade and get some reps in. And, for this example to see it, what I've noticed is that, like, even if I get stopped out and we still hit that final terminus, I look at that as like an amazing thing, and it's just something to work on. So I would look back at this trade and say, okay, this inversion fair value gap got disrespected and I was stopped out. Okay, so how many handles was between my stop and where price was trading before it moved against me? Was there some an imbalance in the higher time frame on the 1 minute, the 2 minute, the 5 minute that price tapped into before spooling higher towards my terminus? These are things that I think it's important as a trader to look back at and to say, it's going to help you grow, and like, even when you get stopped out, stay in the trade. Stay watching it live and watch it at least until it hits your potential terminus, or if it, at least until the end of the session. I think that's important. And if you can't do that, then make sure you come back to it at a later time and see what price did. And one of the things that's literally, it's helped me so tremendously, that aspect of journaling, going back into the chart, looking at the trade I did. Okay, I got stopped out. Did it hit my terminus? It did. Okay, what could I have done better to maybe hold on to that trade a little longer? It didn't hit my terminus. Okay, I actually did the right thing here. All right, let's look at other macro times. All right, so like, for example, this is 950, 1010 macro. Okay, let's look at every hourly macro. And that's what I do. I literally go through every hourly macro, and I use in my notes, I look at an opportunity, and okay, this opportunity on NQ or MNQ provided 30 handles off of a inversion fair value gap, right? Targeting relative equal highs or relative equal lows, whatever. And I do that with every macro, and that's what's helped me, because ICD talks about your reticular activating system, I believe it's called. You're seeing these patterns and these movements and these things in price continuously. And the only way you're going to do it is by actually looking at the chart nonstop. Whether that's staying up late doing it or waking up early and doing it, you have to do it. That's the only reason I've gotten better. The only reason I've gotten better is because I've been putting the time in. And it doesn't necessarily mean pushing the button. It means just going back and looking at what price did. What did it do? During the PM session. Was the PM session clean? If so, look at those hourly macros. Do you see your setup? Do you see it around liquidity? A PD array of your liking form? A potential opportunity to enter? And annotate your entire chart. Where's the buy side? Where's the draw? Where's the sell side? Where are the higher time frame imbalances? These are the things that are helping me. And the more I do them, the better I get. And it's why I have to refund it. I haven't taken a payout yet from these, and I'm okay with that, because I understand it takes time. But I've never had the refunded accounts before. To me, that I was just talking to my wife about it. I'm like, dude, I got 3 funded accounts. And I know that doesn't, someone more experienced, that's all right, yeah, I'm there too, I've been there. But for me, it's such a huge deal. I'm really proud of myself for doing it. I've never had that. And I got them all within 1 month. And it's really just because I'm not quitting on myself with this. I have to get this. I'm not giving myself no other option but to get this done. I'm not giving myself a timeline or a due date. I'm just telling my wife, my mother, everyone, I'm doing this for the rest of my life, and I'm gonna get this down. So I hope that reached someone. I just felt like I had to say that. But I feel like my development has been, these past few months has been amazing. This month has been great. It's been amazing. And there's that stop out. And yeah, that's all she wrote. So great paper trade, great end of the week.